Hi, my name is Galen Blythe, and I am with Noble Insurance Solutions. Today we're going to talk about small businesses and how they will be affected by healthcare reform. Under the guidelines, a small business would be any employer that would consist of anywhere between 2 and 50 employees or full-time equivalents. So any combination of part-time or seasonal employees that add up to under 50 employees would be a small employer. Some major aspects in how healthcare reform is going to impact small employers come 2014 will first off be how they determine whether they will first of all offer a plan, and then second of all, if they offer or continue to offer a group plan for a small business, whether or not they purchase inside or outside of the exchange. Cover organ or shop is for small businesses. If a small employer is currently offering benefits and they continue to offer a plan after January 1st, 2014, what they will want to do is first off is see how they are going to qualify for a tax credit if they purchase a plan through the exchange. So if their plan renews in the middle of the year, potentially they'll want to be looking come January 1st in order to just take advantage of the full amount of that tax credit. SHOP is the name of Cover Oregon, or the health insurance exchange in the state of Oregon for businesses to purchase a plan. It essentially creates another marketplace for them to look at additional options that their agent will continue to be able to offer plans through, in addition to the plan that they have had up until now. Purchasing through the exchange or shop in Oregon is where employers will be able to qualify for the tax credit based on the premium of their plan and the amount of employees enrolled. However, what we have been told up to this point is that the implementation of shop could be delayed past January 1, 2014. Health insurance carriers in Oregon will be offering plans inside and outside of the exchange or shop in Oregon. So all carriers will, in effect, offer very similar plans at similar levels. Like we've talked about on the individual side, is there will be 4 levels of plans. The base plan would be a bronze, then up the tiers would be silver, gold, and platinum. And every carrier would have those benchmark plans for each level of coverage. There will be options for an employer in how they wish to set up their plan, because for some employers in the past have offered a dual option where an employee could choose between a high or a low deductible with one carrier. And with the setup of shop, that will change drastically. In the past, with that dual option, that was with one carrier, potentially with one or up to 2 or 3 different plans to choose from. The employer will now have 4 different options of how they choose to set up the plans for their employees. The first would look a lot like what we've seen in the past for most employers, where the employer chooses one plan with one carrier. The next potential would be one carrier and multiple plans, like we talked about a dual option in the past. But in addition to those 2 options, the employer could also have one plan with all the different carriers available in their area, or every available plan with every carrier. So if you're an employee and let's say you live in an area where one network or one plan is stronger than another, you may want to choose the plan that is, again, the same as every other carrier, but that one has a better network. Or you are an employee that has a higher health need, you utilize your plan more often, then you would want to choose a plan with the highest level of coverage, and maybe the plan that you are sure to have the doctors that you use in their network. As the employer, you will have the option of setting a dollar amount that you contribute for any one of these plans. So if an employee decides to purchase above and beyond that dollar amount of plan, they would pay the difference. That would be paid for through a payroll deduction, similar that it has done in the past. But it would be a defined contribution that the employer would list as what they would cover for an employee or an employee and spouse or family. Any plan purchased above and beyond that would be at the employee's cost. With all these different carriers potentially available to one employee, all the billing and the way that one person or one employer pays for that is through the exchange or through SHOP. They would only have to pay one bill, and then those payments are distributed to each carrier. So as the employer, you're not going to have to pay 5 different bills for every different plan that is offered. In the past, the state minimum requirement has been for an employer to contribute 50% of the employee-only premium. So the employee would, if that employer was offering the minimum amount, the employee would pay the 50% of their premium, but also would be paying 100% of their dependent premium. In 2014, that will change completely. If the employee's cost for coverage, whether they have enrolled on their own or with dependents, if their cost exceeds 9.5% of their income based on what the employer is contributing, then that employee will actually have the option to opt out and purchase a plan on their own through Cover Oregon, the individual health insurance exchange. One example would be if an employee was making $30,000 a year, and if their contribution exceeded $238 roughly per month, that would be over 9.5% of their monthly income. So they would be able to opt out of the plan and purchase a plan through the exchange, through Cover Oregon. In the past in Oregon, there have been several association or trust plans where employers of all sizes can purchase a plan through that association or group of several employers together to gain a discount or preferable premium on their health plans. As a result of healthcare reform, there has been a benchmark set or what has been described as a bona fide association, meaning that it does need to be industry specific. You can't just have an open-ended association where any employer can participate, but there needs to be some common industry amongst participants, and those plans will continue to exist and hopefully move forward where employers can gain a favorable premium on their plans. A couple of examples in the state of Oregon would be the Home Builders Association, where home builders, general contractors, but also subcontractors like an excavator or a plumber, electrician, those will continue. That would be one example. Or another would be a manufacturing association, any employer that is producing something. That would also be another example of an association, and those at this point have been viewed as a bona fide association plan. The important thing to remember as a small employer, so again, anyone under 50 employees or 50 full-time equivalent employees, is they are not required to offer a health plan. That has been a pretty common misconception, is that everyone will be forced to offer a health plan. The mandate is not for small employers. The mandate is for either large employers or for an individual that they have to have coverage January 1st, 2014. One exception to be aware of would be a case where there is common ownership between multiple companies, that when the sum of those companies as a whole would be over 50 employees or 50 full-time equivalents, then that could constitute a large employer where the mandate would be effective, and in that case they would have to offer a health insurance plan. One big difference in how you will see it as an employer when we market your plan, whether we're quoting a renewal or looking at new options for you as an employer, is the census. And the census is something that we've used every year in the past traditionally, that includes the names of employees, dates of birth, gender, and how they're enrolling. There will be an additional column where you will need to show each employee's individual income on an annual basis. We will want to use that salary information to make sure that you as the employer are meeting the minimum contribution requirement. The important thing to remember is that as your agent, we will be certified through the exchange, whether that's Cover Oregon or SHOP. We will be able to shop and market those plans for you, that you do not have to go through the process of enrolling or just determining your subsidy or premium cap. We will be able to do that work for you and get you enrolled in those, whether it's inside or outside of the exchange going forward. The important thing to know is that all of this news is subject to change. All we've been given is guidelines right now, no actual rules. So please make sure to continually check back, as we will be posting updates as they become available. We want to make sure that all of our clients or anyone that accesses this site has up-to-date and, most importantly, accurate information.